Hello friends, welcome to Stock Mart channel. There are about 8,000 plus stocks in share market, which makes it difficult for an investor to do research on buying these stocks. It is also equally difficult to find good quality fundamental stocks at a cheaper price. We often end up buying these quality stocks at a higher price and later do think about buying them at an initial stages when it is available at a cheaper price. In this video, we are going to discuss the top quality fundamental stocks in the price range below Rs 500, which will benefit shareholders to buy, accumulate, and hold for long-term wealth creation. Let's get into the stocks. The first company is Finotex Chemical Limited. Founded in 1979, Finotex Chemical Limited is engaged in the business of manufacturing auxiliaries and specialty chemicals for multiple sectors such as textiles, construction, water treatment, fertilizer, leather, and paint industries. Finotex Chemical Limited is a leading manufacturer of over 450 specialty chemicals and enzymes. Their state-of-the-art manufacturing plants situated in Navi Mumbai in India and Selangor in Malaysia are interchangeable across the entire product range. Their new plant in Ambernath, Mumbai will enhance the capacities from 104,000 metric tons per annum, catering to their new clientele across key international textile hubs. The company is a leading manufacturer of chemicals for textiles, home and hygiene, construction, water treatment, mining, fertilizer, leather, agrochemicals, paints, and adhesives. Finotex manufactures specialty textile chemicals for the entire value chain for the textile industry, including pre-treatment process, dyeing process, printing process, and finishing process. Let's discuss this one after the other. Pre-treatment process. This is actually performed in order to remove the foreign materials from fabrics and improve the constant water dissolving characteristics and affinity for dye stuffs, that is relationship towards the dye stuffs. Dyeing process. This process is all about absorption and diffusion. That is, absorption is transferring of dyes from the water solution onto the fabric surface, and diffusion is the dyes getting diffused, that is spread into the fibers. Of course, the temperature and other controlling factors play a major role. Printing process. Printing is a process of decorating textile fabrics by application of pigments, dyes, or other related materials in the form of patterns. Followed by finishing process. In textile manufacturing, finishing refers to the process that converts a woven or knitted cloth into a usable material, and more specifically, this is performed after dyeing the yarn or fabric to improve the look, performance, and feel of the finishing textile or clothing. The company is a wholly owned subsidiary which manufactures more than 470 plus product categories that involve specialty textile chemicals, manufacturing water and oil-based drilling fluid chemicals, and a wide range of home care disinfectants, detergents, and sanitizers. The company has more than 100 dealers in the Indian and international markets. Further, it is also present in approximately 70 countries, including Brazil, Bangladesh, Germany, Indonesia, Malaysia, Singapore, USA, etc. Following are some of the key clients for the company. If we look at the consolidated performance of the company over the last 5 years, revenue from operations are growing steadily from 1823 million in FY19 to 5170 million in FY23 at a CAGR of 23.2%. Also, the operating margin is very stable and looking good. Also, EBITDA has increased more than 3 times from FY19 to FY23 at a CAGR of 26.6%, and the margins are also looking very steady. Further, if you look at the PAT, that is profit after tax, it has increased from the levels of 243 million in FY19 to the levels of 896 million in FY23 with a CAGR of 29.8%. Both return on capital employed and return on equity is increasing year after the year, which is a very good sign for the company. Further, if you look at the shareholding pattern, promoters is holding 65.04%, FIIs, that is foreign institutional investors, having 0.75%, domestic institutional investors contribution is at 3.65%, and public is holding 30.56%. Next company is KNR Constructions Limited. KNR Constructions Limited is a multi-domain infrastructure development organization with more than 2 decades of experience and executes the construction of technically complex and high-value projects across segments such as expressways, national highways, flyovers, bridges, irrigation projects, urban development, civic amenities, commercial and residential projects. The services of the company includes constructions of roads, highways, bridges and flyovers on hybrid annuity model that is combines two infrastructure construction models and undertakes irrigation projects, urban water infrastructure management and agriculture projects. Company has been ranked 486 in Fortune India's 500. The company actively provides engineering, procurement and construction services, and as on date they have 20 projects on hand across various states in India. Its execution capabilities are they have successfully executed more than 6,000 lane kilometers of road projects till date with a good track record of order execution within the timeline. They have a strong in-house EPC division, that is engineering, procurement and construction division, with all project implementation for BOT and HAM road projects. BOT is normally a build, operate, transfer contract used to finance large projects, especially infrastructure projects developed through private-public partnerships. BOT projects are normally large-scale greenfield infrastructure projects that would otherwise be financed, built, and operated solely by the government. HAM is otherwise called as hybrid annuity model. In this, the payment is released in 10 equal installments based on the completion of targeted project milestones. The remaining 60% of amount has to be arranged by the road developer. The developer finances around 20 to 25% of the total project cost. The remaining amount of the money is raised as a debt. The company has 1,302 tippers and tankers, 400 excavators, 260 generators, 51 rollers among other equipments. They are more focused on their business verticals, featuring constructions of elevated metro rail and railway projects. The key strengths of the company are they are having a significant experience and strong track record in timely and successful execution of projects. Also, companies getting repeated orders on continuous basis, which is a positive sign. They're having a good clientele base with customers from GMR, Oriental Structures, Engineering India Limited, etc. Also, they have a qualified and experienced employees led by a proven management team. They are expertise in sourcing and maintaining supply chain for raw material. This shows pan-India project execution capacity with number of projects and its related project value across each states. The company has a wide network of client base and these are some of them. From the chart, we can easily find out that the EBITDA and revenue shows gradual improvement and shows very consistent growth since inception from 2010. Similarly, the net profit and return on equity shows considerable and very decent performance since inception, which is good for the company. About the shareholding pattern of the company, promoters holding 51.09% of shares, foreign institutional investors holding 5.98%, domestic institutional investors holding 33.66%, while public is holding 9.27% of shares. Moving on to another company, Wipro Limited. Wipro is an Indian multinational corporation that provides information technology, consulting, and business process services. It is one of the leading big tech companies. Wipro's capabilities range across cloud computing, computer security, digital transformation, artificial intelligence, robotics, data analytics, and other technology consulting services to customers in 167 countries. It is the fourth largest Indian player in the global IT services industry behind TCS, Infosys, and HCL Technologies. The company provides IT products as a complement to its IT services rather than selling standalone IT products. It provides its offerings in all major industries such as government, defense, manufacturing, IT, telecom, utilities, education, and financial service sectors. Over the past, it has acquired a total of 26 companies across different areas, primarily in the information technology sector. Overall, 97% of the revenue comes from IT services segment. The company's IT services offerings are organized through two global business lines, Ideas and iCore. Ideas. It includes the service line domain and consulting, applications and data engineering, research and development, and Wipro Digital. iCore. It includes the service line cloud and infrastructure services, digital operations and platform, cyber security, and risk services. The company's primary service offerings are into applications, artificial intelligence, business process, cloud, digital experiences, consulting, cyber security, data analytics, engineering, and sustainability. Wipro Limited is a debt-free company, and from the graph, we can see that over the years, it has given a significant growth and revenue for the company. Its IT services business has grown at a CAGR of over 6% in the last 10 years, and the other highlights are it has 1,444 active global clients with top customer concentration at 3.1% of the revenue. It has a global footprint, which is a part of New York Stock Exchange and present in 6 continents. It has a diverse talent pool with 250,000 employees and 36.4% are women employees. If you look at the revenue contribution, 3.1% comes from top customer, 12.5% from the top 5 customers, 20.5% from the top 10 customers. Similarly, if you look at the strategic market unit mix, 28.8 and 30%, totally 58.8 comes from America, while 29.5% of market unit mix comes from Europe. If you look at the revenue mix, 59.5% comes from offshore revenue, 40.5% comes from on-site revenue. And if you look at the sector mix, 33.9% comes from banking, financial services and insurance, 18.7% comes from consumer, 12.2 from health, 11.3 from technology, 7.3 from manufacturing, 4.6 from communication. If you look at the operating performance, margin, revenue, and net profit, all three are in a very good trend. If we see the revenue is continuously increasing, so as the net profit, which is continuously increasing over the years, and operating profit margin is at a steady pace. If you look at the return on equity and return on capital employed, both are within range and it is good for the company. If you look at the shareholding pattern of the company, promoters holding 72.9%, foreign institutional investors having 6.32%, public is having 10.78%, domestic institutional investors having 9.8%, while others having 0.16%. The other company with current market price lesser than 500 is ITC. ITC Limited is an Indian conglomerate company and leading FMCG marketer headquartered in Calcutta. ITC has a diversified business across industries such as FMCG, hotels, software, packaging, paper boards, specialty papers, and agri-business. The company has 13 businesses in 5 segments. It exports its products in 90 countries and its products are available in 6 million retail outlets. Over the last decade, ITC's new consumer goods business have established a vibrant portfolio of 25 plus world-class Indian brands that create and adds value chain in India. India accounts for 78% of ITC's revenue, while rest was from exports. ITC Limited is part of Nifty 50 index. ITC, Imperial Tobacco Company, started its journey during August 24, 1910. In the year 1913, they set up their first cigarette factory in Bangalore. In 1925, they set up packaging and printing business. In 1953, they set up lithographic printing business of Printers Limited. In the year 1975, they entered into hospitality sector. In 1994, hotels under the company were transferred into the listed subsidiary company ITC Hotels. In 1996, they were part of Cricket World Cup sponsors. In the year 2000, they stepped into clothing, stationery products, and gifting business. FMCG. ITC has 25 mother brands spread across multiple FMCG sectors. Its popular brands include packaged foods, that is into Ashirwad, Sunfeast, Bingo, EP Noodles, Candyman, and Minto. Personal care includes Savlon, Fiamma, Vivail, and Superior. Its stationery includes Classmate and Papercraft. Apparels includes WLS, Mangaldeep, and AIM matches from Agarbatis. Many of its brands are leading players in their market, and if we see presently, Ashirwad, Atta, Bingo, Sunfeast, and Classmate are number one players in their markets. And EP Noodles, Engage, and Mangaldeep are number two players in their respective industries. Also, if we see their integrated consumer goods manufacturing and logistics, that is ICML, has been commissioned at Medak in Telangana in March 22. And they are planning to set up more factories in the years to come. Cigarettes. ITC is the leader in the organized domestic cigarette market with a market share of over 80%. Its wide range of brands includes Insignia, India Kings, Classic, Gold Flake, American Club, Will's Navy Cut, Scissors, etc. Cigarettes constitutes 40% of its company's revenue. Despite this vertical contribution of only 40% to the revenues, it is the most profitable business of the company with 81% contribution towards profit before interest and tax. India is the fourth largest market for cigarette industries. The other segment where the company is more focused are into its hotel business. Launched in 1975, ITC Hotels is one of the fastest growing hospitality chains in India. It is the second largest hotel chain in India with 108 hotels at 70 locations in the country. It is operating across multiple market segments and it possesses a room inventory of 290,000 rooms. ITC's hotels are classified under four distinctive brands: ITC Hotels, Welcome Hotels, Fortune Hotels, Welcome Heritage. Its new brand ITC Narmada, a luxury 291 key hotel in Ahmedabad, was launched in August 2022. And in Q2 FY23, their two new properties were added to the portfolio under the Story by ITC Hotels brand. And more such projects are in the fray. The next segment is agri business. ITC is the second largest exporter of agri products from the country. It trades in feed ingredients, food grains, marine products, processed fruits, coffee, etc. It also exports leaf tobacco under this vertical. ITC is India's largest and world's fifth largest leaf tobacco exporter. New species facility at Guntur established to be commissioned shortly and world-class manufacturing unit will also be commissioned at Mysore for export of nicotine and nicotine derivative products, which apparently the company will be serving to US and European Union markets, which is expected to be commissioned very soon. Paper boards, paper and packaging. ITC is the market leader in value-added paper boards segment. It is also India's largest converter of paper boards into high-quality packaging. ITC manufactures the entire spectrum of paper boards from 100% virgin, food-grade boards which are made from renewable and sustainable sources to 100% recycled boards. Recently, Nadiad unit in Gujarat commenced operations during Q2 FY23. ITC Infotech. The company has a strong presence in the IT sector, mainly focuses on applications in automation, infrastructure, digital workspace, cloud, artificial intelligence, etc. These are some of the performance of ITC in various segments. They have robust growth in FMCG sectors, which the segment revenue has gone up 16.1% year on year to exceed 5,000 crores in a quarter for the very first time. They have a continued strong performance in cigarettes segment, followed by best ever Q1 in hotel business. Its segment revenue in hotels were up by 8.1% year on year on high base, with segment PBIT up by 17% year on year. Under agri-business, their segment revenue has gone up 31% year on year. In paperboards, paper and packaging segment, they have shown gradual and very good improvement. The company's market cap is over 5.5 lakh crores, and the company has taken a lot of initiatives in corporate social responsibility. If you look at the financial performance of the company, the revenue has gone up significantly from the levels of 48,340 crores in 2019 to the levels of 70,990 crores in 2023, which is a huge jump. Similarly, if you look at the net profit, it has increased from the levels of 12,836 crores in 2019 to the levels of 19,477 crores in 2023. So both revenue and net profit looks very promising. And if we look at the operating performance margin, it is growing at a decent pace, which augurs well for the company. Further, if you look at the return on equity and return on capital employed, both the performance are in a very good trend and it keeps increasing years to years. The company is having a very strong balance sheet and its reserves are increasing year after year. If you see from the chart that in 2019 it was at 55,917 crores and presently the company's reserves are at 67,171 crores, which is phenomenal. And similarly, if you look at the shareholding pattern, 43.6% of shares are held by foreign institutional investors, 41.92% of share are held by domestic institutional investors, public is holding 0.04 and others having 14.41%. So these are some of the quality stocks below rupees 500 with good fundamentals showing good profitability and consistent growth in their respective business. We may consider adding these in watch list to buy on dips and keep accumulating for wealth creation. If you feel that there are any other potential stocks under this price, you may mention it in the comments space. Further, if you like the content of this video, please click the like button, share it with your friends, and do subscribe for more such interesting videos. Jai Hind.